Hello and welcome back. This is Christopher Aaron. This is the iGold Advisor channel. And if you've ever been looking on the internet and you've been looking for these articles on the US dollar, is the dollar going to collapse? Is it going to lose its status as the world reserve currency? So many people have been talking about that. That is what we are going to answer here in this update. US dollar update. Is it going to collapse? That is the topic of this video. Make sure to hit the red subscribe button to be notified when these videos come out. And make sure to follow us on Twitter at iGlobalGold so you will know when these updates are available. Let's get into the legal disclaimer. And now we go. So, what we are going to do is look at the best comparison between the US dollar and the next largest currency in the world by trading volume, and that is the euro. So here we are looking at the euro to the US dollar, all of the available history. Remember, prior to the early 1970s, all currencies were officially tied to the US dollar, which itself was officially tied to gold. After 1971, after the breakup of the Bretton Woods Accords, is when currencies were allowed to freely float against one another. So we are looking at a 75-year chart here. All of the available data between the euro and the United States dollar. And of course, before 2002, the euro, what we're looking at here are the constituent components, primarily the Deutschmark and the other large currencies in the Eurozone, because that is when the euro was founded. And luckily, we have that data available to us. So here it is, the euro versus the US dollar. Remember, the higher that this goes, the better the euro is doing. The lower that this goes, the better that the dollar is doing. So let's start to do some analysis on this crossbear here. Notice if we go back to the peaks in 1979, and notice how the peak back here matches exactly with the peak here from 1992. That's interesting. So notice then if we can just continue to extend this line outward in time, a lot of these peaks match up into the same region here. This region right around 145, 146. And so in retrospect, when we look back at this attempt to break upward here by the euro, we can indeed label this as a false breakout. We can see that that in fact was false. It was unsustained. It collapsed back down, and from there it's been lower since. So we have a very clear resistance zone. Make sure you pay attention to the key here. Very clear resistance zone above 145. And then if we look for support for the euro to the dollar, notice how if we start to connect a best fit from the absolute low here in 1985 through the subsequent lows here in the early 2000s, okay, interesting. That's an interesting trend. Notice now if we just continue that trend outward, oh my goodness, are you telling me 3 data points line up almost precisely on this trend going back for 30 years? And then we just continue this further in time. Wow, 4 data points match up on the same line. Okay, very interesting. So clearly buyers are acting in patterns. Buyers for the euro are acting in patterns. Wait a minute, you would say now. I thought the markets are supposed to be completely random. I thought they said that we're not able to predict anything about the markets, that past results are not indicative of future results. That is complete rubbish, complete hogwash. Of course we can learn something about the markets because the markets are composed of the sum of human beings. And human beings move in patterns. Just as we go to sleep at similar times of the day, just as we work at similar times of the day, just as we commute in similar patterns, just as we wear similar clothing at certain times of the year, because of the patterns embedded in nature around us, absolutely we can learn about the future by studying the past. And that's what we're doing here with the comparison between the euro currency and the US dollar currency. The buyers for the euro matched up here on a very precise line. Now we can extend this into the future, and those of you who will recognize this pattern, of course, this was a large multi-generational triangle pattern, ascending triangle pattern. You can see it quite plainly. Except, right here, notice that the euro broke the trend. Going all the way back for 30 years, the euro broke the trend, sliced lower through the trend. So that is what we label as a trend break. Now, what does a trend break mean? What does this mean that the euro has fallen below a 30 to 35 year rising trend? Here's where this gets very interesting. First of all, notice how thus far the euro has struggled. It's struggled to get back above the trend. This is textbook perfect technical analysis where you have a trend break and then the market cannot get back above it, above this 112 level. So if we now draw what is the primary trend, it is no longer this rising trend going back to 85. It is, in fact, the new primary downward channel that began at the peaks in 2008. Very clear to see how a lot of these peaks match up on a similar line. A lot of these lows match up. Markets like to move in parallel lines. Don't ask me why. It's human nature. Why do humans like to move in parallel lines? Well, we can think of other reasons. Think about when you're driving on the road. You like to move sort of in a parallel line to the edge of the road, don't you? So you better believe that that applies to a study of the markets. So the other interesting thing is that when we zoom this in right here to the final portion from the trend break and then this failed retest, let's zoom it in. Now we're looking at the last year's worth of data right here zoomed in. Notice how this is forming a big distribution topping pattern. This multi 1, 2, 3, 4 attempts here at trying to accelerate, all failing, all coming back to this blue support. This is absolutely a topping pattern. So when you juxtapose the fact that the euro is topping here over the short run with the fact that that top is happening exactly here at the failed retest of a 35-year trend, this starts to really look like a significant top in place. And so it appears that as soon as the 107 level here breaks on the euro to USD, this thing should be slicing lower and then within the next several months head back down to the lows, which coincide with these lows right there. Let's get rid of the short term so we can pay attention to the long term here. So we just looked at a topping pattern in the euro after a trend break from a 35-year trend. And then we say, well, if that's a topping pattern, what comes next? Well, what comes next is that this market begins to round down. We just said rounds back down to the lows here around 95 cents. But from there, it's not going to stop. If you've broken a generational rising trend, the next thing to come is a generational declining trend. This is generally how markets work. They move in one direction for a long period of time, and then they tend to move in an opposite direction for an equally long period of time. So my best expectation here is that, notice the scale here, over the coming 2 decades, I'm not talking today or tomorrow, but over the coming 2 decades, the euro is going to be moving back down toward its all-time lows. Close to this level where we'll be approaching needing 2 euros to buy 1 US dollar, which is a far cry from where it is right now. And so think about what this is going to mean for the euro and the US dollar. This is not going to happen in a vacuum. What's going to happen here is that the dollar is going to remain a strong world reserve currency, the only world reserve currency. And furthermore, it means that the euro is going to decline. And again, this is going to happen for political, geopolitical, economic, perhaps even military reasons, which could in fact lead to a failure of the common euro currency. I have a question mark there because that's a speculation, but we absolutely do have plenty of evidence here that the euro is going to decline. So I want to tell you that if you are a premium member of our Precious Metals Intelligence, we are getting ready to profit based on this information. We are getting ready to short the euro and go long the US dollar, because that is what the plain and visible evidence shows us should happen following a 35-year trend break, now moving lower in favor of the dollar. Okay, so all those stories, all those people talking about, well, China is going to introduce a new currency, or the BRICS nations are going to introduce a new currency, or they're going to move off the petrodollar, and therefore the dollar is going to go to zero. The Arab nations are going to start pricing their oil in Chinese yuan, or euros, or Brazilian reals. All of those ideas, all of those theories, all of that fear-mongering, all of those stories, it's all rubbish. It's all rubbish. The dollar is going to stay strong. The euro is going to weaken. That is the evidence of the charts as they stand today, September 14th. Now, there are rare occasions in which gold can rise with a strong dollar. We've been discussing some of those reasons in our premium updates. Think about this for your own life. How are you going to prepare for a strong dollar? I suggest that if you're outside the United States, you hold the majority of your savings in US dollar form. And if you would like to profit over the shorter term, these are the types of trades that we are doing in Precious Metals Intelligence Plus. You will see weekly members-only videos just like you've seen now, except covering not only the US dollar, but also the US stock market, Bitcoin, gold, silver, the mining sector, and you get flash updates right to your inbox the moment that we make these trades, so you can follow along with us. If you would like to take your investing to the next level and receive Precious Metals Intelligence for free, you've got to check out Elite Private Placements. This is for higher net worth investors when you would like to receive the most amount of leverage on natural resources and commodity-based investments, because you get free warrants with every investment that you do not get when you buy the same companies in the open market. Remember, you also receive Precious Metals Intelligence, our flagship service, for free when you sign up for Elite. If you'd like to speak to me one-on-one, know you can reach me on the Consultations tab and schedule a sit-down chat to discuss your situation from my researched, independent perspective. You've got to start thinking about that breakdown in the euro, how that's going to affect you. It's going to affect you even if you're not in the Eurozone or in the United States. This is almost 60% of the volume in the US dollar index is with the euro. And so the way that the euro moves, the dollar is going to move opposite, and it's going to move opposite for most other currencies, including the British pound, the Australian dollar, the New Zealand dollar. Most of the emerging currencies are going to be moving lower as the dollar is moving higher. So make sure that you think about how to plan for that for your life, for your business, and for your investments.